Good afternoon, everybody. Today is February 20th, 2015, and welcome to our live market analysis for the British pound versus US dollar. I'm the Chief Technical Analyst here at HyperFX Academy, and I'll be walking you through some of the trade setups that occurred during the US session today. Now, we're using our basic HyperFX zigzag indicator. If you want to download this indicator, the link will be in the description of our YouTube description. You can download that and take advantage of that. Now, we're basically using a 5-pip Renko chart. What that means is every one of these blocks represents 5 pips of movement. And we'll be using two types of trend lines, both angled and horizontal, depending on the position of the second dot in relation to the first dot. So I've labeled the two first entries here for you. Our first down break occurred at this bar right here, and you can see this was a great move. Went for 60 pips, I believe. That was a great movement. Again, if you're trading 10 standard lots, that could be a $6,000 trade. And if you're trading just one standard lot, that's still $600 if you let it go for the maximum movement. But even if you captured, 20 or 30 pips, that was a great way to start the day, trading day. Our second trade was this up break here at this point here. You can see that this Renko brick closed past this trend line at this point, so that signals our second entry for the day, and that was a 5, 10, 15, 20, 25 pip move. Okay, our next entry would have been this down break here, and that went for 5, 10 pips right there. And then we had another down break here, and that was a great trade as well. Let's see. And that trade went for 5, 10, 15 pips. So the market was moving very well today. It was a very active trading session, a lot of movement. Let me get those trend lines out of the way. After that, we had a nice upside break right here. Now, mind you, we had a fake out right here. You notice that this candle closed below that horizontal break right here. But again, once you get the opposite signal, you want to make sure you exit the initial entry and get into the opposite direction, okay? So that's very important to remember, and I'll try to point that out every video. Sometimes you will get a fake out, but if you get the opposite signal, you want to exit that down trade in this case and then get into the opposite direction, because you can see it goes for quite a way, and you don't want to sit there waiting for the market to come back around, because that doesn't happen sometimes. Here is, after that, we had a trade on the upside here, and then actually we had a trade on the downside here as well. So this is a bit of consolidation here. So you would have bought here and then sold here. And then again, the importance of getting into the opposite signal. So both of those were fake outs. They only went for 5 or 10 pips, and chances are you still would have been in both of those trades. But if you had just got into the last signal you received and just closed out those positions, then you can see this was the right direction. So you'll always get the right direction in the end, and you might get 1 or 2 fake outs, but this was a great example of why you should not stay in a previous trade if you get a new signal, because this went for 5, 10, 15, 20, 25, 30, 35, 40 pips. So this was a great movement and would have easily made up for the fake out you got. So just keep that in mind. If you get another signal, exit your original position and get into the opposite. And then we had this beautiful down break here. Let's see. Right there. And this is a great trade as well. This is later in the day. We wouldn't be trading around this time because it's well after noon. But again, it just goes to show you can still capture 5 or 10, 15 pips later on in the day, even when the market is consolidating. Now, I forgot to mention this up break here. So if you had gotten into this, if you had missed this break opportunity, you notice this red dot is higher than the previous red dot, and we do not use an angled trend line when we have higher highs, okay, on the resistance levels. When we have a higher red dot, the second red dot is higher than the first, we don't use an angled trend line, we simply use a horizontal, okay? And you can see that the price action broke that horizontal trend line at this point here. So if you had missed this angled trend line, again, this red dot is lower than this one, so we can use the angled trend line. This red dot is higher than this one, so we don't use the angled, we use a horizontal. Okay, So I just want to be clear on that. So that if you had missed this opportunity, you would have had another chance to get in here, and that was a nice movement as well. So that was our recap today, guys, of the British pound versus the US dollar. I'll be joining you again on Monday afternoon, and we'll be using our Renko chart again, using angled and horizontal trend lines just to recap the market using this very basic strategy. Again, all the indicators, there's links in the description for you to download the zigzag indicator here and the market hours indicator, and you can use those in your trading. Till then, we'll be joining you again on Monday as mentioned. Till then, happy trading and have a great weekend. Thank you.